This is Barman, question 15 from section B of the June 2023 paper 1. Barman is a sole trader who runs a design consultancy service. She keeps full accounting records, so she does double entry bookkeeping, but the computer files have become corrupted. She's been able to provide the following information. So we've got some details here of her non-current assets, computer equipment at cost, computer equipment provision for depreciation. So these are all the figures at the start of the year, fixtures and fittings at cost, and fixtures and fittings provision for depreciation. We've got a whole load of information about additions, disposals, depreciation, provision for doubtful debts, the bank account, and a prepayment of office rent. And we've got to stick all of that lot into an extract from the statement of financial position, just showing the total assets. So this is where we would need to use the International Accounting Standards layout, where assets are equal to equity plus liabilities. So we're just doing the top section of that, and there will be a mark available for showing the total assets. So we're just going to start with non-current assets and then show the current assets and add the two together. Okay, but let's just have a look at the numbers. Okay, so 1st of November 2022, they purchased computer equipment costing £6,984. Okay, so that's an addition. So we need to add that 6,984 to the computer equipment at cost. So 6,984 is going in there. Depreciation on computer equipment is charged at 25% per annum using the straight line method. And depreciation is charged on a monthly basis. So that means that the assets that were there for the whole year, we're going to do depreciation at 25% on the whole lot, which is 3,750. But these ones that were bought partway through the year, we need to work out how many months we've owned those for. So they were bought on the 1st of November 2022. The year started on the 1st of January 2022. So they've only been there for November and December, so only 2 months worth. So 6,984 times 25% times 2/12 or 1/6. 6,984 times 25% times 2/12 is £291 worth of depreciation. Okay, so what we're going to need to do when we do the accounts is include the cost. So it will be those two figures together, the 15,000 plus the 6,984. The provision for depreciation was 5,625, and we're going to need to add the 3,750 on the assets that were there at the start of the year, plus the 291 on the assets that were bought during the year, and that one is time apportioned. Okay, now conversely, on the 1st of June 2022, fixtures and fittings with an original cost of £4,000 and a net book value of 2,900 were sold for 1,650. So but if we know the net book value and we know the original cost, we can work out the depreciation to date. So the fact they were sold for 1,650, we can kind of ignore. The depreciation to date, which is going to be included up in this provision for depreciation, is going to be the difference between the 4,000 and the 2,900, which by my reckoning is £1,100. Okay, so the fixtures and fittings at cost, we're going to need to get rid of minus £4,000 out of there. And the provision for depreciation, we're going to need to get rid of the £1,100 to do with the disposal there. Okay, so depreciation on fixtures and fittings is charged using the reducing balance method. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. So that means we don't have to time apportion it. But let's just do some calculations here. So depreciations on fixtures and fittings, we need to know the cost. So the original cost of the fixtures and fittings was 20,200, but we've got rid of one that was worth £4,000. So that's going to leave us with 16,200. The depreciation provision brought forward was 7,800, and we have got rid of £1,100 worth of depreciation that was to do with that asset that was disposed of. So that's going to leave us with £6,700. So the difference between those two, add the cost minus the depreciation to date, is the net book value, which is £9,500. So the depreciation is going to be 15%, let's get the right figure, 15% of that figure, which is £1,400. 25. So that's the figure that will go off to the income statement, but we need to add that into the provision for depreciation up there, 1425. Okay, so fixtures and fittings at cost are going to be the 20,200 minus 4,000, which is going to be 16,200. And then the provision for depreciation is going to be 7,800 minus 1,100 on the asset that's been disposed of, and plus 1425, which is going to be 8125. Okay, so we've now got enough to be able to do the top part of the statement of financial position. So let's get some columns headed up here. So we've got cost, provision for depreciation, I'm just going to abbreviate that, and then net book value or carrying amount, whichever term you prefer. And let's label these sections up properly. We're only doing an extract, but that's no excuse not to label things up properly. Non-current assets are going to comprise computer equipment and fixtures and fittings. Okay, so the computer equipment, we had a cost of 15,000 and we added 6,984 to that. So that's £21,984 worth. And then we had 5,625 in the depreciation provision, and we've provided 3,750 on the assets that were already there at the start of the year, and another £291 on the assets that were bought during the year. So that's 9,666 in the provision for depreciation. The difference between the two, £12,318. That's the net book value. The fixtures and fittings, we already worked out, we've got 16,200 after that disposal left in the cost, and we've got 8,125 in the provision for depreciation. We've got the brought forward minus the depreciation on the disposal plus depreciation on the assets that remained. So 16,200 minus 8,125 is 8,075. Okay, so we can just add those two figures up, 12,318, 20,393. Now we could add these up for completeness as well. We would have 21,984, just to double check our maths as well, 38,184. We can put a line under there. We're not going to do anything else with that number. 125, so 17,791. And just check that plus minus that does actually equal the net book value. So that's the one we're interested in adding to our current assets. So current assets. Now let's just remind ourselves of what goes in current assets. It's inventory, it's trade receivables, it's prepayments or other receivables, bank and cash. Okay, so let's just see which ones of those we've got. Now, Barman is a sole trader and she runs a design consultancy service. So this is a service business, so it's unlikely to have any inventory. So we could put inventory in there, but because she's running a business that provides services rather than selling goods, it's unlikely that she's going to have any inventory in there. So there's no mention of any inventory down here. We'll have a look through all the details in a minute. Now we've got trade receivables. And we need to find some information about the trade receivables. Let's see what it says about her trade receivables. Now, it doesn't actually tell us about trade receivables, but it tells us that a provision of 637 for doubtful debts was created at the 31st of December 2022. This was calculated at 2% of the trade receivables at that date. So this is the year end that we're dealing with. So number 5, we've got the trade receivables to calculate. So if 2% is 637, we need to find out what 100% is, because that will be our trade receivables figure. So just like we do with markup and margin, take 637, divide it by 2, and then times it by 100. So 637 divided by the 2% and times 100. And that tells us that trade receivables are 31,850. So when we do our current assets, we've got trade receivables that are 31,850. But don't forget, we've got the provision for doubtful debts. I'm going to call it DDs, not direct debits, but doubtful debts. Because it's an initial provision there, the figure would have been the same in the income statement in this year and in the statement of financial position. Remember, subsequent years, we're just allowing for an increase or a decrease. So 31,850 minus 637 means that our trade receivables are 31,200. 213. Okay, now we're going to need to see if we've got any bank balances or other receivables. So it says that the bank statement at the 31st of December showed a debit balance of 425. Okay, so a debit balance on the bank statement means a credit balance in our books. Remember, the bank prepares statements from their point of view. So a debit balance actually means that it's overdrawn. Okay, so from our perspective, the bank balance is a negative of 425. That's what the statement showed. But Barman knows that there was a bank receipt of 2714. So that's going to come into it. So the overdrawn balance would be a credit in our books. When we receive the money, we debit the bank and we credit whoever paid us the money, the customer, presumably. So that 2714 is going to pay off that overdrawn balance. But there was a cheque payment of 619 that had been included in the cash book but not shown on the bank statement. So that's an unpresented cheque. So that's going to reduce the bank statement balance. So the balance overall minus 425 plus 2714 minus 619 is we've got £1,670 in the bank. But we should probably sort that prepayment or other receivable out. First of all, note number 7 says that Barman rents an office at an annual rent. So annual rent means for the year of 4,560. And at the 31st of December, Barman had paid 3 months' rent in advance. So 3/12 of 4,560 needs to be carried over into next year. So 3/12 of that is a prepayment of 1140. And remember, prepayments go in before bank and cash. So other receivables is what we're supposed to call it now. So other receivables, which is the prepayment, is 1140. And then the bank balance, if you remember down here, is the 425 overdrawn on the statement, plus the outstanding banking, 2714, minus the unpresented cheque, 619, equals 1670. So you can see they've managed to sneak in a kind of bank reconciliation scenario in here, as well as making sure that you know the layout of your financial statement. So let's just add up the value of current assets. Remember, there was no inventory because it's a service business. We've got 3 other non-current assets. So the total for those is £34,023. And then we were asked to show total assets. So let's just add those up together. Total assets, oops, camera's gone wobbly again. 2393 is 54,416. Isn't it easy when you know how? Thanks very much for watching. I will cover the written part of this question in a separate video.